please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, looking good. The markets hit a half century actually. Things looking good. They moved to the high point of the day as well. We're getting Sagar Cement's numbers that are coming in there. Looks pretty good as well. Actually, production as well as sales numbers look good for Sagar Cements. And this is on a like-to-like basis. So I'll read that quite positively. Remember, there have been sounds coming out that in fact South India is doing a bit of a recovery. So good to see that yes, there is a top line growth both on the production as well as the sales front. I'll be interested to know whether or not that can come down to the operating profit, because top line growth is going well. We have seen that in fact there have been some price increases, demand as well has been returning, and these numbers look good. And these numbers in fact on a like-to-like basis as well, they can be compared because BMM has already been consolidated even in the same quarter last year. So good numbers coming in from Sagar Cements. But moving on then, as promised, Bank of Maharashtra that reported yet another loss. In fact, it's making it the 9th straight loss in a row. The asset quality continues to deteriorate while the provision coverage ratio improved a tad bit. Mr. Ravindra Marathe, the MD and CEO of Bank of Maharashtra, joins us now. Well, sir, this is the 9th consecutive quarter of losses. Could you highlight the results of this quarter? Take us through those details.
This quarter has been also stressful. However, we have reduced the losses to 114 crores this quarter as against 596 of the previous quarter, and the corresponding quarter was also 455 crores. So compared to year-on-year basis, we have down from 455 to 114, and on a sequential basis from 596 to 114. So that way the quarter has been on the recovery path, I can say. And for the full year also, the losses have been brought down from 1373 to 1146 crores.
But sir, at a PBT level, is this the highest loss which has been reported by the bank on account of high credit costs?
For the current quarter, the PBT has been of the order of 1494 crores. However, you should understand that there have been some divergences, and the NPAs, the total slippages were to the tune of 1660 crores. And over and above that, there has been an aging impact of the previous NPAs. So the total provisioning has been to the tune of 1940 crores this quarter. But we are seeing a gradual improvement, and going forward, we are very hopeful that this impact of the provisioning will come down heavily quarter after quarter. Even on the operational efficiency level also, you can see that our net interest margin has been quite strong. For the quarter it was 2.41, and for the full year it was 2.32%. And even the operating profit, which is before the provisioning, has been it has grown by 20% year on year. And our cost income ratio has also come down from 60% to 54%, and the provisioning coverage ratio has gone up to around 58%.
Well, sir, you mentioned divergence. What was the divergence that was reported? Also, could you give us a breakup of your slippages?
Mainly the slippages have been on account of some chunky accounts of the last quarter, and also the fraud cases, because of which around 200 crores have been added, and this entire 200 crores has attracted 100% provisioning. So the provisioning of 1900 and odd crores has mainly come because of the NCLT cases as well as the fraud cases, and one or two chunky advances have been there. The total slippages, you will appreciate that hardly there have been 8 accounts which were more than 100 crores each ticket size wise. So out of the total slippage of 1660 crores, nearly these 8 accounts have accounted for 1000 crores of slippages, and these are all big accounts, so which will not be there next time. And because of some of them have been on account of the frauds also, and the remaining accounts have been on account of the NCLT cases.
Okay, so on that subject, if you could tell us, what is the exposure of Bank of Maharashtra to the NCLT cases?
NCLT cases, we have a total exposure of 8,700 crores. But this 8,700 crores consists of RBI list 1, that is 10 accounts of 4,200 crores, NCLT list 2 also of 10 accounts, which comprises about 2,200, and the remaining 39 cases are such which are not from the RBI list. However, they have been taken to NCLT either by our bank alone or in the consortium of other banks. So the total portfolio is 8,700 crores, and you will be informed that 62% is the provisioning coverage on this. We have provided to the tune of 62% on all these accounts. Yeah.
Up about 0.5% on all the key indices. Some news on Manpasand Beverages, where the company along with Parle will be distributing brands in Western markets. Let's address the market technicals then. Ashwini Gujral and Prakash Gaba join us on the show now. Ashwini, bit of a pickup in the markets, you would say, at least at the index level as we speak. Your thoughts on the day so far?
See, the market's getting into a strong short covering mode. So the second half, like I've been saying since morning, is likely to be better than the first half, and particularly the banks look like the bank Nifty is breaking out of 25,800. So banks, Nifty, both these places you can get long on. Today particularly PSUs are doing very well, so all kinds of PSUs like GAIL, BEL, BEML, even metal PSUs, all of those stocks are doing well. So that way there is fairly strong support on the market, that too at the higher level of the range, which is positive. As far as individual stocks are concerned, OIL is a buy with a stop of 224, target of 236. Bombay Burma is a buy with a stop of 1585, target of 1640. And JSPL is a buy with a stop of 248, target of 264.
All right, Ashwini, just take a look at JSPL moving to the high point of the day. Results in a couple of days, and those numbers are expected to be blowout numbers, but the street seems to be factoring in that as well. The stock has moved around 255 rupees in today's trading session itself. Let's get the intraday chart of JSPL up for you on the screen. Prakash, coming across to you, what picks do you have for us?
I have two picks here. The market looks up. We can see Steel Authority of India climbing to levels closer to around 77 zones, stop below 73. I also like Sun TV. Looks like Sun TV is the place that's going up to levels closer to around 880 zones, stop below 868.
Ashwini, do you see the correction extending in names like Ujjivan, down 5.5% today?
See, right now there are some stocks which are going down, and difficult to say whether that correction will continue, but Ujjivan has hit 425, 430, which is a previous significant top. Now, often in a market that's going up, stocks, unless they have stock specific problems, they don't keep going down. But Ujjivan anyway has been a sideways underperforming type stock, so I don't think it really fits into stocks going up.
Okay, all right. Thanks so much, Ashwini, as well as Prakash, for joining in and giving us your trading calls. Well, let's get a quick check on the initial rates coming in from the European markets. Let's see what they are doing as we speak. Remember, in Friday's trading session, those markets, they ended with good gains. The DAX, in fact, was up closer around 1%, and that's opened up more or less flattish today. Even the CAC, as flat as can be. So, fair to say that European markets, they've opened up more or less flattish. But I think on that note, we'll slip into a short break. We understand that the Power Ministry will meet RBI officials on May 8th with regard to the Feb NPA circular. Lata's with us to give us further details on that. Lata.
Well, the Reserve Bank's February 12th circular, if you remember, said that all loans over 2,000 crore, if stressed, would get 6 months to be resolved, and if not, they would be marched to the NCLT. As it happens, a large part of that are power companies, and in fact, as we have reported several times, as much as about 2 lakh crore could go to the NCLT, and some as early as September, when the 6-month period since the circular ends. So the Power Minister, even on our channel, speaking to Anshu, has spoken against it. And now the meeting that he so much wanted to call with the Reserve Bank officials is happening tomorrow. Among the things that the ministry is seeking is that the Reserve Bank rule says that on the due date, the clock starts ticking for resolution. They want due date plus 30 days because, payments from SEBs and stuff like that, the discoms can take time and therefore don't keep due day. The other thing is that you have to resolve in 180 days from the date of missing of payment. They want it to be 365 days because they believe a resolution can't happen in 180 days. And then there are other smaller issues like, there are already processes underway, like if you remember SDR, strategic debt restructuring, S4A, strategic restructuring of stressed assets. All those were, all those were dissolved as of February 12th, and RBI said hereafter you can resolve it any which way you like, but you get 6 months. The processes that were already underway, the ministry wants that to continue, and they be given a deadline of September 30th. So that's another demand which they are making. And a fourth demand they are making is that, 100% of the bankers need not agree. If 75% agree, that is enough. Actually, the Reserve Bank has already clarified that it is not looking at 100% or anything, so long as the resolution comes from the banks. Now, the point is, how much will the Reserve Bank give in? So far, the Reserve Bank has not given in to any. And I spoke to sources close to the Reserve Bank and to other bankers who could be aware of the meeting. And they said it looks extremely unlikely because when steel went through hell, Reserve Bank didn't give any special dispensation to steel. The special dispensation or, protection came from the ministry in terms of MIP. So the Reserve Bank's position would be the ministry has to push discoms into good behavior or whatever, and that they will not carve out for any subsector. This is what I'm picking up, but anything can happen at the meeting.
Okay, meeting tomorrow. Thanks, Lata, for that. On that note, we spoke to PB Ramesh, the CMD of REC, and Pramod Deo, the former chairman of CERC. Listen in to what they had to say.
Power assets which are under stress are very different from any other sector. I mean, this is the reason, as you have said rightly so, is there a problem of fuel supply or there is a problem of demand? And now we are for the first time, the country is in a surplus context. We have a generation surplus, 330 gigawatts of installed capacity. Additional capacity is being added through the renewables. The demand is stuck around 160, 170 gigawatts. So you are in a surplus situation. But just imagine 5 years down the line, when you add another 175 gigawatts of renewable power, you need thermal to ramp it up, to balance it. Number two is the growth demand and the new additional capacity being added by Saubhagya. So we are essentially in a phase of transition from a high supply, low demand situation to a more synergized, more harmonized type of a context.
We are not going to have any tariff revision for next 2 years because of the political situation that we have today. Because if you see today, this year, by the end of financial year, all the state regulatory commissions should have come with their tariff revisions. But we find only 7 have come. So question comes is that if you are not going to have tariff revision and if you are going to buy power, after all 70 to 80% of the cost of the DISCOM is power purchase cost. So from where will they pay that money? Because this states already have taken that responsibility now.
All right, then time to slip into a short break. Up next, we go full tilt on earnings. ICICI Bank as well as Exide, they'll be reporting their Q4 numbers. We'll get you what to expect.
Crore Bank in focus. The stock has gained close to about 0.5%. Rakesh Jhunjhunwala, a long-time shareholder in Crore Bank, has bought an additional 20 lakh shares in the Jan to March period. That's what the shareholding shows. This would take his stake to 3.36%. Nigel just tells me from 3.09%. While the stock is down about, just 16%, at least since the start of 2018, it's fallen quite a bit from the high that it hit of 161 in the month of September or October. So if you pull up a one-year chart, you can see the stock has slipped about 35% from its recent peak of 161. On the back of this development, Rakesh Jhunjhunwala reaffirming his faith in the stock and picking up some more stake. The stock has seen some buying in trade. But the big one to watch today will definitely be ICICI Bank. Abhishek, first the numbers and anything on the conflict of interest story of Chanda Kochar. and Videocon.
Well, Rima, the focus will be on slippages. Now, that as per analyst estimate is expected to be in the range of 10 to 15,000 crore rupees. The previous quarter, the slippages were at 4,380 crores. Now, we need to watch where the slippages come in from, whether they come in from known level of watch list and restructured portfolio, or they come in from standard book or unknown territory. So, watch list stands at around 19,000 odd crores, while restructured book stands at 14,400 crores. Coming on to the restructured portfolio, we need to see the impact of RBI circular that was there on 12th of February and how that impacts the provisions of ICICI Bank. Talking about provisions, they had stake sale in ICICI Securities, which actually helped them in gaining rupees 3,500 crore, which can be used to provide cushion on the provisions front. The management's commentary with respect to their stressed asset portfolio going ahead will be watched very keenly. Loan growth above 8 to 10% will be positive. Last quarter, it was at 10.5%. Now, our poll suggests that the NII growth or overall the PNL is expected to be the worst for ICICI Bank in a quarter. So NII can decline by 1.7%, while net loss can be of 13 crores. Now, talking about management changes, there have been reports and buzz that there can be a change in management with respect to the Videocon case. However, sources tell us that this is unlikely to happen. Back to you.
Okay, all right, Abhishek. Thanks so much for joining in and giving us those details. Well, so hop across to Sonia. She's joining in to tell us about Exide. What do we expect there, Sonia?
Well, don't get too excited about Exide this time because it's expected to be a mixed bag for the company. The revenue growth has been quite good. In fact, there's been a move from the unorganized to the organized sector over the last many months, and that's benefited both Exide and Amara Raja in the auto replacement segment. Exide has been gaining market share as well. So revenue growth of about 25% is what we're expecting this time around. It's on the margin front because of the higher lead prices. The margins could get impacted a bit, although the company did undertake some price increases. It was not enough to make good the higher lead prices that we've seen. So we're expecting the margins to dip slightly to 12.9% versus 13.3% earlier. But the good part is that Exide has been increasing its service offerings over the last many weeks and quarters. They in fact recently changed their technology. They're now using the punched grid technology, which gives longer life batteries. Also, they have launched new batteries for the e-rickshaw segment. So there's lots happening, which could keep the stock buoyant. I'm expecting the profits to grow by almost about 20% to come in a little less than 200 odd crores or so. Even in the telecom business, although it is a low margin business, the orders have gone up over there. So the industrial segment, which consists of telecom, will look quite good. We're expecting about a 5 to 10% growth in that segment as well. If you compare Exide to Amara, Exide has done nothing over the last 12 months in terms of a move on the stock price, but it is still marginally cheaper than Amara Raja batteries. The FY20 EPS for Exide stands at about 12 rupees or so, which gives it a valuation of 20 times FY20. This compares to Amara Raja trading at around 22 odd times. So it still has a bit of margin lever compared to Amara Raja. Back to you.
Thank you, Sonia, for that. The benchmark indices are pushing higher as we speak. The Sensex is now up close to 180 points, while the Nifty is now nearly up close to about 60 points. Take a look at the intraday charts of an ICICI Bank ahead of numbers. That stock seems to be gaining, rallying close to about 2%. ITC is contributing steadily through the trading session.